Solana is flashing major warning signs. After a volatile start to the year that saw prices tumble from a January peak near $149, the market is now questioning if the recent rebound has any strength. Welcome to the generational wealth community, your pathway from knowledge to legacy. We don't chase hype, we decode the market. While some see the current stability as a sign of strength, on-chain data reveals a troubling picture underneath the surface. The very engine that powers the ecosystem is sputtering. Institutional sentiment is turning. And the technical charts are pointing toward a critical test that could determine Solana's fate for the rest of the year. Today, we're decoding what the slowdown in on-chain revenue really means. Why the bulls are running into a wall of resistance, and I'll give you my data-backed prediction for where Solana is headed next. So what's happening on-chain? The core of Solana's ecosystem health, its decentralized application revenue, has hit a wall. In just 2 months, DApp revenue collapsed from $36 million to $22 million, marking an 18-month low. While Solana has managed to maintain its leadership in decentralized exchange spot trading, this sharp decline in overall revenue signals that user activity and capital are beginning to dry up. This isn't just a minor dip. It points to a structural weakness. When the main drivers of on-chain commerce and fees begin to falter, the fundamental support for the token's price erodes with it. We saw staggering DEX volumes earlier in the year, with Solana even surpassing Ethereum. However, that momentum has clearly faded, leaving the network vulnerable. A second trend is emerging in the derivatives market. Professional traders are becoming increasingly bearish. The funding rate for Solana perpetual contracts has fallen to near 0%. This indicates that demand from traders betting on a price increase has all but vanished. At the same time, the options market is telling a similar story. The delta skew, a measure of bullish versus bearish sentiment, has climbed to 12%, which means traders are paying a premium for put options that protect against a price drop. Even though newly launched Solana ETFs have seen modest but consistent inflows, the positioning in the derivatives market suggests that the smart money is actively hedging against a significant move to the downside. If you're finding this breakdown useful for understanding what's really going on with Solana, do me a quick favor and hit that subscribe button. It helps the channel a ton, and you won't miss our critical updates as this situation develops. This worrying on-chain picture is reflected perfectly on the price chart. After a volatile start to 2026 where the price fell from nearly $150 to a low around $75, Solana is now in a precarious position. The price is currently trading around $94, but it faces a wall of technical resistance. Immediate resistance is found at the $98 to $100 psychological barrier. The most critical level to watch is the support zone between $80 and $84. This floor has been tested multiple times, and market analysts warn that repeated tests tend to weaken a support level. A decisive break below $80 would invalidate the current recovery attempt and open the door for a swift move down toward the $64 region, or potentially even lower. So what is the path forward? The bear case is clear. A failure to break above $100, followed by a break of the critical $80 support zone, would confirm that sellers are in full control. This could accelerate the downward trend as traders who bought at higher levels are forced to sell. However, the bull case isn't entirely off the table. The most significant catalyst on the horizon is the Alpenglow upgrade, which is expected to roll out on the main net in the first half of 2026. This major overhaul is set to deliver near instant transaction finality of around 150 milliseconds, a massive improvement from the current 12 seconds. This could fundamentally shift Solana's narrative from a retail-focused chain to institutional-grade infrastructure. If the bulls can defend the $80 support and reclaim the $100 level with force, the bearish momentum could be neutralized. Alright, so here's what I think happens next. While the Alpenglow upgrade presents a powerful long-term catalyst, the short-term outlook appears challenging. The combination of falling on-chain revenue, bearish sentiment in the derivatives market, and precarious technical setup creates a toxic cocktail for the bulls. I believe the path of most pain is a retest of the $80 support zone. A decisive break below that level seems more probable than a sustained rally from here. The recent stability feels more like a consolidation before the next major move. and the underlying weakness suggests that move will be to the downside. The structural damage from the revenue collapse is severe, and it will take more than a few days of sideways price action to repair. Subscribe for daily recaps. Drop a comment on your biggest takeaway and turn on notifications. We do a crypto news video every morning and a deep dive every afternoon. Let us know in the comments any subjects you'd like us to cover. Quick disclaimer, I'm not a licensed financial advisor. This is for educational purposes only and not financial or investment advice. Crypto is volatile. Never invest more than you can afford to lose. Do your own research.